Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This simply talks with another video, and this time this video corresponds to the market as well as one of the stocks in the auto segment, which looks attractive at these levels. So we'll discuss about that. Let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should there with their own due diligence and research, and I'm not in favor or against any company that I talk about. I'm not a member of the NSC and BSC, and that I'm not a portfolio advisor. Whatever discussions with respect to markets or stocks that I have is purely on the basis of my experience into the market, and whatever decisions with respect to investments you take or trading you take, kindly take that on note is that it is laden with market risk, and kindly do consult your official financial advisor before taking any call. Now, before I talk about this company and the market, here's one request to kindly support me on Patreon. Once you do that, help me grow the channel, help you also ask me questions, seek out and get detail. Once you get the $10 membership, you have access to my portfolio, my watch list. I just changed my portfolio and I have put that up on YouTube, on WhatsApp, on Patreon as well. So you can have a look there. Plus, you have access to my portfolio, different companies, analysis on different companies, discussion on domestic and global markets, watch list that I keep updating on a monthly basis, and there are long-term stock picks that I keep putting up on a weekly basis. And whatever queries you're having, I'll answer that. So you can become a member there. You can check that out. The links will be in the description. Now, in order to discuss about the markets, let me take you to the TradingView website. And so we are here on the TradingView website. If you see here, what I'm going to discuss today about more is on the small cap and the mid cap index. As far as Nifty is concerned, we are seeing that Nifty has remained sideways for a few weeks, and this is a weekly chart of the Nifty on a 5-year basis. And you see the RSI has dipped to around 47, 48, which is very reasonable. In October of 23 we were around these levels, and in March of 23 we were around 38 levels. So there is a chance that we may dip towards 23,000 at worst. But I have kept saying that the valuations have become better as the time has gone by. So if you look closely on a surge, the market was at around 23,000, 24,100 here in June of 2024, and from there the market has not done anything. So over the last 6 months the market has remained absolutely flat. From 24,100 it closed at 24,000 on in June of 2024, June of this year, and in December we are around 24,000. So 6 months of consolidation has meant that the RSI, which was around, you can say around the 73, 74, has become 47. uh, and that gives me confidence that over the next 1 year there's a lot of money to be made with the markets going up. Similarly, for small caps and mid caps, the markets have not gone up very sharply, although small caps have outperformed again. But if you see, 54,200 was the market here. It was around 56,000, 55,600 in July, and it's around 55,600, 56,000 now. So again, over the last 5 months, the market on a net basis has remained same for the small caps, although many small caps have doubled, have gone up 60, 70, 80% more than doubled, etc. Again, a dip towards 55,000, 54,000 is not ruled out. Even a sharp correction towards 52,000 is not ruled out on the small cap index, but you need to show the gumption here because the market is going through a phase of decline and consolidation, and there is a little bit of fear among, you can say, investors across the board. Globally, you look at US markets declining, you look at cryptocurrencies going down over the last week or so, and we are seeing a kind of bearishness after the Fed meeting, etc. So I believe two rate cuts will happen, and there could be one more rate cut. We'll see how data turns out in the next 3 to 6 months. So we cannot rule that out, considering how the Fed wavers from time to time. So over the next 1 year, I think the markets should end up doing pretty well. Now, in order to you can say benefit from that, I bring to you one of the stocks from the mid cap domain, and that is Uno Minda. And I have made videos on Uno Minda earlier as well. It's a 61,000 crore market cap company, and it's in the auto ancillary space, incorporated in 1958. It provides automotive solutions and systems in as and for OEMs for different, you can say, brands globally. And if you look at on a detailed basis product profile, they have, you can say, ancillary products for four wheelers, two three wheelers, two wheelers, and every across the board. And now the company is, you can say, have been developing a number of new EV specific devices such as onboard chargers, DC-DC converters, and smart plugs, and many other products. So they have gone into the EV space big time. They have had capacity expansion of around 190 crores just a few, you can say, 2 3 quarters back. That is under process. And if you look at the revenue breakup, then the switch segment is around 29%, lighting is 23, and the other segments in here. So basically switching and lighting is their major segments. And in terms of clientele, Bajaj, Honda motorcycles, Hero Motocorp, Royal Enfield, Yamaha, all the big brands are their clients, majorly in the two-wheeler segment. They are big in that. And so in terms of geographical split also, they have businesses globally as well as here in India. If you look at the numbers, and we come to that in a bit. So the market, the PE is around 68 for Uno Minda. And uh, yes, it looks stretched, but if you look at the PE over the last 5 years, the average has been around 59-60. So what that tells me is that uh, no, it is not ultra expensive. It is not very cheap, but it's not ultra expensive. On a 10% decline towards 1000 to 950 levels could be very interesting levels to get into. Now, why I'm bringing a auto company in here, although the auto industry is going through a very difficult phase, because the companies that I discuss here is purely on a basis of the next 3 to 5 years, which are going to perform. So probably in a year's time, this cycle should revise, and over the next few months, you can do an SIP and probably buy into it between levels of, say, current levels till 1950, and probably have a very good average price for you to be finally entering into. Now, in terms of quarterly results, the company has shown robust growth in a very difficult environment. If you see, uh, in the September quarter, they did 3600 crores versus this time around they did 40 to 50 crores. That's a 20% jump. Profitability went up 20%. Margins remained stable at around 11% in an environment where many companies had their margins shrink big time. So eventually profits were also very decent. So a very stable company which is producing 18, 20, 22% growth on the top line and the bottom line. In terms of balance sheet also, it's a pretty decent at 5000 crores reserves with 2000 crores of debt or borrowings. uh, if you look at shareholding pattern as well, you have promoters holding around 68-69%. FII holding has consistently increased. If you see here, 6.5%, 1.5 years back has gone up to 9.7% even in the last quarter. Although FIIs are selling across the board, left, right, and center, they have bought into Uno Minda. DII shareholding has dipped a bit, but even at 15% is pretty robust. And if you look at public shareholding, is only around 6.5%, which is good. Where public is less, and FIIs, so large investors or strong hands are holding on to the stock, and that is probably why the stock has given very good returns over the last 5 years. That is probably why even in a downturn for the auto industry, the stock has not fallen a lot. The stock went to the, you can say, 200 DMA and has recovered from there. So I would say around 950 is a very strong support. Any declines from these levels could be very interesting to buy into over the next 3 years. I do not rule out an 18-20% CAGR for the stock in that period. So one can definitely have a look at it. Coming back to the markets, what I feel is that one should have a mix of mid, small, and large cap in similar proportion. We are seeing that currently in live markets, we are seeing 23,800 reaching. I won't be surprised if we go to 23,400 by January and then recover from there. Just to give you an idea, this year I presume that 1100 rupees of earnings would be there considering 23,800. Based on that, we are just 21.6 times, which is not expensive at all. Not cheap, but not expensive at all. Next year, I believe we are going to do 12% growth. That's in terms of earnings. That's what I feel. I don't see a 15-20% growth. I see a 11-12% growth because the inflation will be around 5-6%. And so the growth, in my opinion, could be around 12%. Considering that, an EPS of 1230 rupees is very much expected for FY26. Uh, and on that basis, on 1232 rupees at around 23,800 levels, the market isn't very expensive. So we are trading at 19.3 times. Normally around 1 year forward, 18 and a half to 19 times the markets bottom out. So I think around 23,000 in the worst case scenario, the market be should go as low as, I mean, the worst case could be 23,000 on the index, 23,200 or something of that sort. That is the worst case scenario in my opinion, which was the high of the election day. When the election day high was made, it was 23,300. That's where I think the market could head towards. And we saw a low of 23,260 recently. I think we could again revisit this. That is, in my opinion, the worst case scenario that we are looking at. So this was a video on Uno Minda and the markets. So please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it. Kindly support me on Patreon. Thanks a lot for watching.